So welcome to the this IAA webinar on a paper recently published by the IAA titled IAA Quality Assurance and Governance Initiatives on IFRS 17. This webinar will be hosted by three people. Myself, I am Gabor Hanak, and I am the immediate past president of the IAA and chair of the IFRS 17 Coordination Task Force. And joining me are William Hines, who is the chair of the Insurance Accounting Committee of the IAA, and Derek Wright, who has worked on both ISAP 4 and the ISAP 4 task force of the IAA, and worked on the IAN 100. So I will be speaking about the background. William will be speaking about the key elements of the paper, and then Derek will be speaking about ISAP 4 and IAN 100. And then after these presentations, we'll take questions, if any. So use the chat function during the presentations or in the Q&A session. Or at the end of a QA session, you can use your raise hand, which can be accessed by clicking on participants, and then you will see a raise hand function. So next slide, please. So the background to the paper is that the executive committee of the IAA realized that so many IAA entities had worked on IFRS 17. It was not just the Insurance Accounting Committee, but other committees or working groups and sections of the IAA, that some kind of coordination was necessary. The executive committee created this IFRS 17 coordination task force in January 2018. The main roles included the coordinating function, facilitating discussions, and what is more important for this webinar, proposing marketing and promotional materials and activities by the IAA when it comes to IFRS 17, and what the role of the actuary could be or should be under IFRS 17, or reporting under IFRS 17. So the membership of this task force included leaders of IAA entities, committees, and relevant sections. Next slide, please. And the task force started discussions on other activities like webinars, and we had a webinar or seminar on IFRS 17. One important one was when a member of the ISB joined us in explaining some key elements of IFRS 17. But the task force realized that there would be or should be promotional material explaining the role of the actuary for IFRS 17 or under IFRS 17, and actually realizing that even though the responsibility for the appropriateness of the financial statements lies with the board of an insurer, nevertheless key experts or professionals such as actuaries will play a critical role, and that should be well understood by the users, and in this sense, I'm not thinking about the user of the final statement, user of the information internally by an insurer or an auditor, and it should be transparent and well governed. And so that led to the idea that we should prepare a quality assurance and governance paper emphasizing and recognizing or promoting the role of the actuary. The main elements could be to advise the insurer as the preparer of the final statement, and at the same time, the auditor of the insurer on certain key issues when they report or audit under IFRS 17. And that is very critical because of the complexity of IFRS 17. and the many judgments that are needed in order to prepare the final statement and audit those final statements. So the services that an actuary provides to the preparer, or the insurance company, or the auditor should be well established in a professional manner and clearly communicated to the decision makers. Next slide, please. It was clear that the intended audience of this paper should be certain international organizations. So they are not actuaries in the first place, but those international bodies that are affected by IFRS 17 reporting, or reporting under IFRS 17, and that are concerned about the quality of such reporting, and that should recognize the role of the actuary under those reportings. So that's such organizations, and I say, when it comes to the IAA, we are dealing with supranational bodies, as stakeholders. So we mean preparers or groups of insurance insurers reporting under IFRS, then auditors who audit such reportings, and also standard setters, authorities, and other organizations whose terms of reference include activities in relation to reporting under IFRS 17 at an international level. So individual actuaries or members of the IAA, so full member associations or associate member associations, are not among the direct audience of this paper, but obviously they are affected by, and they should know that there is an initiative by the IAA aiming at the attention to these international bodies. Next slide will give you a glimpse of what organizations we have sent the document to. I'm not going to read that. This is for the purpose of you to review when the slide deck is available after this webinar. Next slide, please. So how we did it, how the task force did it. The task force decided to work out this paper on quality assurance and governance in early 2018. And we received considerable support from our European friends, the Actuarial Association of Europe, that in the meantime worked out a similar paper, although under the European under the European environment. So it's different from the IA's document, but in terms of objectives are concerned, a similar one. And the first draft was developed in 2018. It was submitted to full member association of the IAA early November in 2018, and the common deadline was end of the year. Next slide, please. And the task force received quite a number of comments of various nature. And the task force considered each and every comment in detail, and considered such comments and incorporated most of the comments into the revised document. And then the task force liaised with those full member associations or commenters who submitted substantial comments if they are satisfied with what the task force, how the task force handled the concrete situation in each case. And then we had a almost final document. It was sent to the communication subcommittee of the IAA, of the executive committee of the IAA. This communication subcommittee has a task to review external communications from the point of view of branding of the IAA and readability, language, and the communication subcommittee made a few comments, and those were incorporated into the final draft document, and the final draft document was submitted to the executive committee, which approved the paper for release. I think it was in August, so in September, the paper was released. So that was my part, and I would like to pass over to William, who will speak about the key elements of the paper. So William, please continue.
Thank you, Gabor. Welcome, everyone. The paper itself can be found on the IAA website. You can see in the bottom right-hand side of the slide here that you follow the links to publications and then papers, and you'll be able to find the document that we're discussing today. The paper itself is organized into 5 sections. The first 2 sections, introduction and background, were just covered by Gabor's comments that he gave just now. The last section gives background on the IAA as an organization and our work regarding IFRS 17, some of the work that is ongoing and some of the products we've developed. Derek will cover in his comments. So in my remarks today, I'm going to cover briefly the main body of the paper and the conclusion section. Next slide. It's important to remember the context of the audience for this paper. As Gabor mentioned, it's meant to be international bodies, typically non-actuarial in nature. And so the paper gives some context, provides some context, identifies the typical areas where a practicing actuary could provide services in relation to IFRS 17. Of course, these include, advising on the selection of methods, assumptions, and data that could be used in the calculations or analysis, performing analyses of movements and values, and providing explanations of those movements, performing calculations themselves, such items such as the technical provisions, including risk margins and associated sensitivity analysis, or reviewing calculations performed by others, as well as the supporting information for those calculations. And the paper notes that both preparers and auditors use the services of experts such as actuaries, and that the recommendations of the paper apply to services provided to both. Next slide, please. The paper identifies certain good practices when providing services in relation to IFRS. The first key element is that an actuary would prepare a report and issue the report to their principal, their person who they're doing the work for, documenting the work that they performed under IFRS 17. The second is that an appropriately qualified actuary would then sign off on that report. Third is that the paper envisions the report being used as evidence for the audit. And there very well could be separate reports from the preparers, the financial statement preparers actuary, and the auditor's actuary who is reviewing that information. And both of those reports would serve as audit evidence. The task force believes that the preparation of a report and the sign-off of that report by an appropriately qualified actuary will enhance the credibility of both the financial statement and the audit opinion, and thus contribute to the common good. Next slide, please. A second focus of the paper involves the role of actuarial standards of practice. Performing services in accordance with a set of standards of actuarial practice, we believe will lead to more professional practices, which then in itself will then enhance the credibility of those services. The paper notes, especially for audiences outside of the IAA, that the standards of practice are really the province of the appropriately qualified actuary's relevant actuarial body, which is typically their local actuarial association or regulator. And the paper also notes that when a set of relevant standards applies, the services performed by actuaries who comply with those standards are more likely to be reliable than work performed when no standards apply. We wanted to make sure that we provided important information on the role of the actuarial standards in the work that actuaries do around the world and how those might enhance the credibility of the work. The next slide, please. One of the roles that the IAA serves is to develop model standards of practice, has done so in relation to various topics. The IAA has developed a model standard in relation to actuarial services performed in relation to IFRS 17 as well. It is referred to as International Standard of Actuarial Practice 4, or ISAP 4. It's important to note that ISAP 4 is a model standard and not binding on any actuary. However, the IAA does encourage actuarial standard setters in the relevant actuarial bodies to adopt and maintain a standard substantially consistent with ISAP 4. Derek will provide a little more detail on ISAP 4 in a minute, and on the additional items that the IAA has been working on. In conclusion, the paper makes the points that the good practice involves preparing and signing off a report on actuarial services related to IFRS 17. Not, it's an additional step, it's an additional assurance step, an additional governance step that we think is a good practice, and that it would be useful for stakeholders to adopt requirements for. We believe that the actuarial practice is more professional and reliable when performed in accordance with the relevant standards of actuarial practice. The IAA has developed a model standard that standard setters can use as a basis for developing their standard. And we believe that all of these elements will enhance the credibility of the financial reports and associated audit. The paper acknowledges that regulators in some jurisdictions and management in some insurance groups require reporting today that is similar in nature to IFRS 17 to be signed off on by an appropriately qualified actuary and be subject to independent review that is also signed off on by an appropriately qualified actuary. In other words, the types of practices that are recommended in this paper as good practice are already being done in certain contexts. The IAA encourages that this practice be followed internationally, and in particular, in relation to services provided under IFRS 17. That's the end of my specific remarks on the components of the paper. I'll turn it over to Jeff.
Thank you, William. Could we take the next slide, please? So as William has just said, ISAP is an international standard of actuarial practice, and ISAP 4 is just one of those. The main purposes of the ISAP 4 is to increase a user's confidence that actuarial services in connection with IFRS 17 are carried out professionally and with due care. So very similar to the paper that we've just been talking about. And the results are relevant to the needs and presented clearly and understandably and are complete. And that assumptions and methodology used are disclosed appropriately. It's often been a criticism that people don't know what actuaries have done, and so the ISAP 4 sets out in its model standard what we believe should be there. The next page, please. So what's in the scope? Well, it's actuarial services related to IFRS 17 for preparers of standards, the statements, for actuaries advising an auditor or a regulator, and for actuaries advising a potential buyer of an insurance entity. The next slide, please. So ISAP 4 has 5 sections. relevant knowledge requirements, so setting out what is expected of an actuary. It then discusses what we refer to as the general measurement approach. It's sometimes referred to as the general model or the building blocks approach. But for the ISAP and the IAM, which we will come to, we've used the phrase the general measurement approach. It then goes on to look at the variations to that general measurement approach, general method, the PAA and the VFA. It then has a section on presentation and disclosures, and then into transition. Next, okay. The ISAP, which was approved and published in November 2019, can be found on the IAA website. We have reviewed this as a result of the amendments that came out in June of this year and determined that no changes were needed. It took a long time to develop this ISAP, primarily because of the standard changed 2 or 3 times as we were doing it, as the IFRS 17 went through its various stages, and we had to go through the governance processes of the IAA. So next slide, please. So an IAN, an International Actuarial Note. Well, this is an education document. It's based on an actuarial subject that has been adopted by the IAA to advance the understanding of the subject by readers of that document, including actuaries and others who will rely on the work of actuaries. It's important to make clear it's not a standard, it's not a model standard, and it's not intended to convey anything in any manner that is authoritative. It is an education note. IANs are issued to assist actuaries in complying with a standard like ISAP 4 by offering practical examples of ways in which actuaries might implement the ISAP or an IFRS. So it's also to provide non-binding guidance on the topic for which the IAA has not developed an ISAP. But in this instance, it is there to support ISAP 4. It's up to each member association the extent, if at all, to which they use this education material. Some may take it fully into their education materials, others might refer to it or use parts of it. We tried in developing this to cover more than just one approach. So in some instances, as we go through the document, you will find it will discuss 2 or 3 different approaches as to how you might be able to go about addressing something that's come up in the standard. The IAN, I'm never too sure whether we have 17 substantive chapters in 5 sections or whether it's 14 in 4 plus a section on presentation and disclosure. We have been discussing this for a number of years and we've gone backwards and forwards. At the moment, we're ending up with 17 chapters, and we'll come to that as we go along. We've written this document as a series of questions and answers. So hopefully people can dip in and out of this and think, what if, or how do you do this? And all being well, there should be a question which addresses that. Each of these chapters in itself is self-standing. You don't need to read all of the pages in the IAN to get an understanding of a particular subject. Different chapters have been written by different groups of people from around the world. So there are slightly different styles. We tried as much as possible to be consistent, but that's not always easy. We've also tried to keep the language as clear as we can, recognizing that a lot of people who might be reading this IAN, English is not necessarily their first language. So we have an introduction, a summary of our approach, and it comments that this document is based on the initial standard from 2 or 3 years back, and the amendments that were published in June of this year. We refer as we go along to papers that were produced for the transition report, the TRG, and we've made it quite clear that anything going to the TRG, staff papers and so on, are not binding in the same way as the standard is. So the Section A looks at the general measurement approach. Sometimes people have called this the building block approach. We have a general chapter on classifications of contracts. Then we go into those building blocks, the estimates of future cash flows, discounting, risk adjustment for non-financial risk, and then 2 chapters that cover unit of account and the CSM. Section B looks at the variation to the general measurement approach, so the premium allocation approach, which is used primarily for short tail products. We then have a chapter looking at contracts with participating features and other variable cash flows, often abbreviated to variable fee analysis approach, the VFA. And then the 9th chapter covers reassurance. Now that's a chapter that has had to have quite a lot of changes made to it recently because of the revised standard, or the amendments to the standard. Section C looks at the use of fair value in IFRS 17. So there is a general chapter on what is fair value, and then we discuss business combinations and transfers, and then the various approaches to transition, one of which is based on fair value. Next, please, thank you. Section D looks at a couple of other topics, the embedded derivatives and contract modifications and derecognition. We then have the final section, which is measurement, presentation and disclosure. Now, this has been probably the hardest section, the hardest chapters for actuaries to write. And it has taken a lot of time. As I mentioned earlier, we have considered whether this should all be in one chapter, because so much of this is interconnected. At the moment, we're thinking it can be in 3 distinct chapters, but we're just finalizing that particular section at the moment. So we're currently working through the comments. I think all but the last chapters on measurement, presentation, and disclosure have now been through the review and editing approach by the chapter leads. We've picked up comments that came from internal reviews by the Professionalism Committee. We've updated to reflect the IFRS 17 amendments, which were published in June. So we're now just going through the final read of that to make sure it looks appropriate. It will go to the IAA Secretariat to make sure we have got a common approach. It's in the IAA preferred format. It will then need to go through the various governing bodies within the IAA. We're hoping that we will be able to have a final version out towards the end of this year, or at the very worst, the early part of next year. The first exposure draft, the first document, can be found on the website, as you can see here. And as we release the next, or once we release the next version, that's where it will be found. Over the last few, probably 7 or 8 years, we have produced 3 monographs, which are all helpful in looking at IFRS 17 and other aspects of actuarial work. The first, quite a few years back now, Stochastic Modeling, Theory and Reality from an Actuarial Perspective. It's a good read, and particularly for those who haven't been involved in any stochastic modeling. Next slide, please. The next one, which came out in about 2012-13, looks at discount rates in financial reporting, and helps practitioners in how to develop and use discount rates. So it does look at things like replicating portfolios, and yeah, some of the other more complicated aspects of setting discount rates, and particularly where there is not enough data at the long end. And finally, the risk adjustments for insurance contracts under IFRS 17, which was published 2 years ago now, and has chapters, as we show there, with a number of case studies. And this one probably is the one that is most closely related to IFRS 17 because it was specifically written with IFRS 17 in mind. Each of these monographs are available for purchase on the IAA website. And I think we're now back to Gabor for questions.
Thank you, William and Derek. I checked the Q&A chat box and I haven't seen anything. First, I would like to ask Derek a clarification. You said that there will be no change to ISAP 4 in relation to the amendments to IFRS 17. So does it mean that the task force, ISAP 4 task force, determined this, suggested to the Actual Standards Committee, and the Actual Standards Committee approved this? On the other hand, you said that you changed the IAN 100 for some modifications, especially for reinsurance. So is it? Can you confirm that there has been no change whatsoever for to ISAP 4, but there will be changes to the IAN compared to the already published drafts?
Yes, the standard is at a fairly high level, so it's setting out principles of things that actuaries must do when they are applying the standard and working on the standard, and it doesn't get down into the detail of any aspect of the standard. So the task force did look at the ISAP 4, it looked at the amendments and decided that the ISAP 4 was still appropriate as it was. That was reviewed by the Actuarial Standards Committee, who concurred with that position. And so the ISAP 4 is now final. I'm sure, like all ISAPs, it will be removed from, it will be reviewed from time to time. But at this stage, there's no intention of changing that. With respect to the IAM, because it's more into education material around what's in IFRS 17, it does need to reflect the amendments that were made. So it's not only reassurance, but that was a key area that needed quite a lot of work on it. And the IAN will be reviewed periodically over the next few years as practice develops, and to the extent there might be anything coming out of the IASB's Interpretations Committee and so on. So we will keep that under close consideration for the next few years.
Thank you, Derek. There are two questions. One from Carlos Aroja. Do you see the actuary as a business advisor in IFRS 17 environment? And if so, how can actuaries be trained to act like business advisors and not merely providers of actual input? Any one of the two of you would like to respond to that?
Yeah, I see actuaries as business advisor in an IFRS 17 environment, in particular in the mergers and acquisition markets, where we are, you know, a number of the consultants are active in providing advice on the value of the business in relation to IFRS 17. The training of people is an interesting idea. I mean, getting actuaries to think more as business advisors, I think, is an opportunity for the actuarial profession, and you know, it'd be interesting to explore how the IAA might be able to help in that.
Thank you. There is another question whether or not 2020 is an outlier for interest rates, considering I guess the pandemic, the consequences. So what do you think about that?
I don't necessarily think it is. I remember back in the mid 1990s, the Japanese interest rates went down to very low levels, and the comment was made, "Oh, it won't be long before they go back up," and they're still the same 25 years later. The same thing was said in respect to the 2007-2008 financial crisis, when interest rates around the world came down significantly. And I know there are some countries which use regression to the mean quite regularly, saying, well, this is okay because they will go back to 5% within a couple of years, and they haven't. So is it an outlier? I don't know. I think we could see long-term interest rates at very low levels for a number of years. But that, of course, is a personal view.
And there is a third question. What have been some of the reactions of standard setters to the publication, especially in markets with few actuaries? Now, I'm not sure what publication the question is referring to. If it refers to this, the paper, which is the subject of the webinar today, I would say that it has been disseminated just in the recent past, so there has been not much time since then, although we received, I think, 2 positive reactions from 2 international organizations that are interested in discussion with us, but those discussions will take the form of either virtual discussions or wait until next year or whatever time. When it comes to, and it's more important perhaps to ISAP 4 or IAN, I think our member associations have responded to both draft publications. So, but I don't know what the answer is, especially in markets with few actuaries. So, William and Derek, do you have any idea about that? I know the IA has a formal process of asking member associations about the usage of standards, but I don't have any knowledge about markets with few actuaries.
There's nothing I can add. I do know, having spoken to some members of staff at the IASB, that they do read what we produce, like the draft of the IAN, and whilst they might not comment formally on them, they would let us know if they disagreed with anything significant. And on the IAN, we had a couple of comments back, but they were fairly minor.
There's a follow-up question to the outlier question. Should the models be answered, should the models be the same? Would you recommend to use the same procedure as before?
Well, that's more of a technical question perhaps, but there's certainly, if you're thinking about models that generate interest rates paths into the future for analysis, there are certainly models that do well with positive interest rates, but some models may not be able to handle negative interest rates, such as we're seeing in certain jurisdictions. And so I can imagine that companies who want to make sure they're able to model the negative interest rates would be changing their process or their economic scenario generator. That's one area I can see where you might see a difference.
I would add that I think if you have a robust model with good model governance, then probably all you have to apply is appropriate judgment in applying your models, and that could be perhaps enough. That's my personal contribution to this.
Gabor, there is a question that's come through the chat facility. I don't know whether you can, you've got that in front of you.
You can read that, please.
Yeah, so the question is, do you expect a broad spectrum of stochastic techniques will be used for IFRS 17? What do you think about the reutilization of methodologies already used in areas such as Solvency II? I'll go first, but I'm sure William and Gabor might have views on this. I think you always have to be careful when you're looking at what's being used for something like Solvency II or other regulatory regimes, just to remember what the use of those are compared to, what Solvency II is there for as a regulatory requirement, as opposed to IFRS 17, which is financial standards. And there are differences between the two. And so it may well be appropriate to use a number of the techniques, but as long as it is appropriate for that particular use. But William or Gabor, anything to add?
Oh, that was the point I was going to make as well. It's really about what is the intended use of the technique or methodology. Does it fit?
I have nothing to add. There is another question. Does the IA perceive any concerns with jurisdictions not applying IFRS 17 or a substantial equivalent standard for insurance reporting? What about cases where it is elected to locally defer implementation date?
I think that's one for William.
We've certainly been supportive of the development of IFRS 17 by the ISB and IFRS 4 before that. Personally, I've been involved in the work of that for probably over 20 years from the IAA's perspective. So we certainly are interested in supporting the work of the insurance valuation. Do we have concerns with them not applying IFRS 17? We certainly are not, IAA doesn't get into very specific jurisdictional issues, but we certainly see some value in a consistent reporting across jurisdictions. And whether that's a substantially equivalent standard or whether that's the same standard, we're probably not going to get into that level of detail. In terms of locally deferring implementation dates, certainly we understand the need to fully understand the implications of adopting IFRS 17 or an equivalent standard, and being able to understand its impact on either if it's used in a regulatory context, its impact on reported capital, or on the level of income that might be reported coming out, so that everyone is comfortable, both the regulators, the reporters, the preparers, and the stakeholders who are using that information to make decisions.
Yeah. Any other questions? I don't see any further question or coming through the Q&A or the chat, unless there is a message that there's a barking dog in the background. So
yes, it's my dog. I apologize.
Your dog. Okay. It's difficult to do anything, but you mute yourself when you're not speaking. Okay, I see no other question for the time being. We will be happy to, one more question though. Do you think actuaries should sign off any reports? Well, I think one of the messages of this paper, which was the subject of this webinar, is that we consider it to be a good practice that actuaries provide those internal reports, one actually to the insurer and another actuary, independent actuary, to the auditor, and they sign off the report. But we wouldn't say they should. I mean, that's the message that we encourage such practices, but we cannot enforce, and we don't want to interfere. But our advice is that it could be a good practice to require actuaries to submit the reports and sign off such reports.
I think it also depends on whether the question meant should the actuary be a co-signatory to an audit report or to a statement. And I certainly think where it comes to should they be a co-signatory to the audit report, the answer should be no, because the auditor has responsibility for that report, and it would depend on the jurisdiction, but they are signing quite often in their personal capacity, albeit a partner or a member of one of the bigger firms. Should they be a signatory on the financial statements? That's often driven by local regulations, local requirements as to who should sign the accounts. But I agree with Gabor that these actuaries should certainly be signing, wherever possible, the reports that they write, which are used as evidence for the auditor or for evidence for the preparers.
Thank you, Derek. So any other questions, perhaps last chance to ask. So if there's none, then thank you for joining. Thank you for listening to us. The presentation will be available on the IAA website. And if you happen to have any further question, please don't hesitate to reach out to the Secretariat, and then they will send us the question, and we will be happy to respond to you. So having said that, I would like to thank Wilhelm and Derek for their contribution to this. Thank you for the Secretariat for organizing, and you guys for participating. Thank you and have a nice day. Bye.